please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Welcome back. Still holding on to most of our gains, 10,414 thereabouts on the Nifty for the time being. Mr. Tulsian, your view on some of these so-called Gujarat stocks, I mean, and particularly the Adani Group stocks are always counted in. Then a couple of names like GNFC or GSFC. Now that this so-called, psychological event is out of the way, is there any specific stock that you'd continue to be positive on?
See, I don't think that except for sentimental reason, you need to take any kind of fundamental or valuation call on all these stocks. Come on the Adani Group stocks, if you really take a call on Adani Enterprises, we know that $17 billion of investments in Queensland, Australia is a very big positive for any government who will all support, and that will really be a big kicker for the group. Come on there, Adani Port, it's an excellent company, no issue seen now there. Come on Adani Transmission, again one of the largest players in the power transmission space. The only sore point for the Adani Group has been of Adani Power, and one can always argue that probably having the normalcy having returned in the form of BJP government again coming in, you may see that issue also getting resolved with 51% being given to government, maybe at 1 rupee kind of thing. So it may be taken, but otherwise I will take this as a status quo, because all these projects for Adani Group were not seen of any kind of having political reflection. If I come on the state government stocks like maybe Gujarat Alkali, GSFC, GNFC, all the stocks have its value, because Gujarat Alkali being the second largest producer of chlor-alkali or caustic soda, they have all been having the highest realization in the present scenario, and all the chlor-alkali makers are doing quite well. GSFC has, again, it's a very, I have been keeping positive view, being complex fertilizer maker and the caprolactam, the largest caprolactam maker. Similar is the case with GNFC. So I don't think that you need to take any kind of specific positive call on these state undertakings also, because there are only these 4 listed stocks of the Gujarat government. So I will be keeping the mild to positive view on all these stocks, which otherwise also I had prior to this Gujarat results having come before us.
Okay. Mr. Tulsian, metal stocks, there seems to be a fresh impetus from them, from the global markets. What will be your pick of the pack?
See, Lata, for last 1.5 years, we have been keeping extremely positive view on both metal, ferrous and non-ferrous. But going forward, in fact, in the morning show also, I've said that maybe the ferrous metal has to see more, situation going forward. Because if you take the case for the non-ferrous, if I just quickly first finish, we only have one proven stock in non-ferrous, that is Hindustan Zinc, which is the integrated producer from ore to finished. And if you see the situation for aluminium, I don't think that the kind of upsurge which we have seen in zinc and copper is going to be seen in case of aluminum, because of the ample availability in the global market. And you have the presence in aluminum like Hindalco, Vedanta and so many other players. So keeping extremely positive view on zinc going forward in non-ferrous space. But coming on ferrous space, yes, situations are looking extremely positive, and that's the reason, in fact, on the NBFC 5 steel accounts also, I have been saying that for last 3 to 4 months, that I will be seeing the hot, contest going on between the acquirer of all these companies and keeping the positive view, because if you take the situation 18 months down the line, the India will surpass as the second largest steel producer in the world, beating the Japan, which is ahead of us by about 18 to 20 million ton. And I am keeping extremely positive view on ferrous steel, and obviously with that as a theme, you need to take a positive view on the natural resources company also, which are catering to ferrous steel like iron ore and manganese ore.
Okay, Mr. Tulsian, we'll thank you on that note. Thanks a lot for taking time out for us today, and of course, we'll talk to you tomorrow. Gautam Chowcharia is also with us, Head of India Research at UBS Securities. Gautam, good afternoon. A bit of a scare for the market this morning, sort of survived that, but your thoughts on the way forward now?
Good afternoon. So clearly the elections seems to be a respite for the markets. We saw a mini scare a week and a half back when some initial opinion polls suggested some possibility for a negative surprise. But then the exit polls came out, and now today morning we saw quite a volatile period. But in general, for the markets, this is a welcome respite. We have seen over the last 2-3 years that markets' reaction post-state elections not in terms of relative performance to emerging markets, doesn't really reflect big wins or big losses like post-Bihar elections or post-UP elections. India's relative performance to emerging markets was not very different and no clear direction as such. So our view has been and still remains that the state elections do matter in the short term for the sentiment, but doesn't really alter the market trajectory or even the policy direction of the government. So I don't think this will anyway now, given that the BJP has won, will change the policy trajectory and therefore in itself be a factor for the markets. So the market will go back to focusing on the other issues, which is earnings, the upcoming budget, what's happening to global macro, the inflation and rate cycle next year.
Oh, actually, if I can develop on that last point that you made, no impact at all on policy making, would you say? No extra munificence towards rural areas or in any other way trying to use the last 14 months in power. You don't expect that?
So there are two things here. One is whether there will be a tilt in terms of new schemes, commentary in the budget or otherwise. That we have been seeing that anyway happen over the last 1 year in the budget as well as otherwise. And we've seen that even the state government is doing farm loan waivers. But that's what the second interesting point is. From the broader market perspective, what is relevant is not a tilt towards new rural schemes or benefits, but whether it happens within the contours of fiscal consolidation or it's accompanied with fiscal expansion. So as we've seen over the last 1 year, whatever tilt and new schemes, etc., we have seen from the central government has been within the fiscal boundaries. And more interestingly, even the state government which have announced farm loan waivers are doing it within their fiscal limits. So for the markets as a whole, as long as we are seeing more tilt towards rural or social schemes, as long as it happens within fiscal boundaries, it's fine for the markets.
Gautam, in that case, is there anything else in terms of a policy trigger or a government trigger that could help the market substantially scale to fresh highs and then, build from there? I'm not even coming to earnings just yet. Purely from politics and, government policy standpoint, is there anything else that you anticipate?
So if you look at the elements of driving growth recovery, so clearly one of the missing elements apart from private capex cycle and apart from weak external environment has been lack of policy impulse, either fiscal or monetary. And we're not seeing any signs of that happening anytime soon, despite 2019 elections. So yes, in that context, whether that will provide a big impulse to markets on the positive growth side, quite unlikely.
Okay, Gautam, let's get to some of the global issues. We saw this absolute breakout in metal prices, metal and metal stocks. Thoughts on that sector?
So that's a sector where we have not been on the right side this year. We went neutral very early in this year, thinking that this will not sustain. And our view has not changed. We are constructive on specific metals from a global perspective next year, specifically aluminum. But in general, from an India portfolio perspective, the risk-reward to us is not very attractive now, top-down. So we stay neutral on that sector.
Okay. Sorry.
In terms of domestic triggers, Gautam, you've been talking about how this market is expensive now, and your fair value, of course, has been much lower than the current market level. Domestically, what would be the key risks as we head into 2018?
So risk, the biggest driver of markets last year, year and a half, or even 2 years has been local retail flows rather than big pickup in fundamentals or earnings. Obviously, the long-term story for India still looks good. So the big driver for next 1 year would also be local flows, specifically in the context of the big scale-up we have seen over the last 3-4 months specifically. And early signs of SBI hiking deposit rates, RBI not as dovish as it was sounding earlier, some early signs of inflation picking up. So that context is very, very critical for local retail flows going into next year.
Okay, and I wanted to ask you about even the entire finance gamut. Now, which ones are you playing? What is your hierarchy within banks and within non-banks?
So broader financial space, we still remain positive and overweight, including SOE banks. We turned overweight around the recapitalization announcement. Hierarchy is difficult to say, depending on the risk-reward profile the investors are looking at and the time horizon. but we continue to like most of the buckets of the financial services. The only area where you would advise some caution is where the leverage to rising interest rates is higher. So select pockets of non-bank financials, but broader non-bank financials, we remain positive.
Okay, Gautam, we let you go on that note. Thanks a lot for your time today. That's the view from UBS. We'll take a break. Once we come back, we'll get you the BTST calls. It's going to be an important day, of course. And we have one big global voice joining as well. Jonathan Schiesel from Ashburton will be with us as well. That's after a short break. The market's losing some ground, not entirely on unexpected lines. The battle is maybe getting a bit closer. Also, keep in mind you were towards marching towards all-time highs, and this has been a range-bound market. So at higher level, there was going to be some profit taking. The volumes today are very high. Of course, that would happen. Almost 9 lakh crores of F&O volumes is what we have. But there are few stocks which have moved to the low point. IT is not helping market today, especially Infosys. That stock is at low point. Tech Mahindra is at low point. ITC has moved to low point. So there are a lot of stocks which are moving to the low point. Nifty IT not reflecting that because of TCS, but a couple of others are at low point. Prakash Gaba and Mitesh Thakkar will tell you what to buy or sell today for a reverse trade tomorrow. So Mitesh, is it fair to assume that the all-time high is acting as a bit of a resistance, and are we still in that broader range? Of course, we'll discuss stocks as well.
Anuj, I believe that, but I was still looking for, or I'm still looking for rather, a test of the upper end of the range possibly in the next 2-3 days. So we've gained good from levels of 10,140, which was there on last Thursday, and it's just settling down process. If you avoid today's morning action, I think we are still doing pretty good. And having said that, I think we'll continue to trade on long side for the time being. And the stock calls that I have are a buy on Indian Bank with a stop at 386 for targets of 405. And Raymond is a buy, keep a stop at 994, look for targets close to about 1060.
Not a day for the faint-hearted, I guess. I mean, the high on the Nifty Bank today was about 25,750. So if you thought, okay, this is going to continue and build, and you bought there,
and
you would have lost a lot of money.
If you see the low of the Bank Nifty Future Surabhi, it was 24,000. The high is 25,773. So you're still closer to the high point than you are to the low point. But yes, that graph will not reflect it, of course, because there was a 5-minute period.
It's drawn to a scale.
Then of course we had the 4-5 hour absolute simple trading at the high point, and then there's some profit taking right now. So those we need a basically
the minor gyrations are not there.
That,
but there would be people today who want to take profit at the long side as well as on the short side, which is why this half hour becomes extremely interesting. Prakash, what are the last half hour trades for you? Is it a buy today and sell, or is it a sell today?
It's a buy today and sell, because we are higher than yesterday. We may be lower than the high of today, but we are higher than Friday. So I think it's a higher close. It looks good to me. I have 2 buys here. Go with ICICI Bank, the mainline bank. Looks like it's heading up to levels closer to around 320 zones. Stop below 300 zones. And Maruti, again, a mainline stock here. Seen a good base formation. I think it's heading to levels closer to 9450 zones. Who knows, 10,000 may be within reach, but 9450 should be fine. Stop below 9,200.
Okay, fair point. Let's do one thing. Earlier in the morning, we spoke with some of the biggest market voices, Madhu Kela, N. Jayakumar and Ajay Srivastav. And there was a bit of a consensus we got in terms of what these elections mean for the market and how the market should play from here on. Let's listen in.
Well, I think for starters, this is a huge wake-up call, and I think I think there's not going to be. It's one state, but it's the home state. So there's clear signs of, I would say, alarm, if not panic. But having said that, I think we can't run away from the fact that this is also giving them time to regroup, because there's obviously a few things that have gone wrong. People have underestimated the resurgence of the Congress, if you will, and I think that's been the big thing. I think what will be a bigger force to reckon with is that the opposition will unite big time now. And I think that's going to be a cause for worry. So things may actually get to be a lot closer. So the premium that we got for a 300 plus or a comfortable majority may actually be a little on the wane. So PE multiples could contract, but more importantly, the flow of money now needs to continue to hold these ostensibly lofty valuations in the market.
Do you think the domestic investors would look at this as a buying opportunity, or is there going to be a bit of a panic, at least in the near term, which could lead to the first major correction and some bit of unwinding of domestic flows as well?
I think what we are seeing as a market reaction today is contrary to what market was expecting till on Friday evening, because all the exit polls were predicting a huge victory for the BJP party, and clearly the results till now are not showing it is in that line clearly. So there are two things, Anuj. One, will there be a panic by the retail investors? So going by my experience, I don't see a panic. Clearly, I don't see huge withdrawals. However, the flow of money which is coming into the markets, 25,000 crore rupees per month, which is what the trend we have seen for the last few months, that might get muted a little bit. But I don't see withdrawal. Okay. And a lot of people who've been sitting on the sidelines, they may use, if there is a serious correction in the market, they may use that as a buying opportunity.
This 20,000 crore that we are getting into equities every month, is that something, like investors would now start wondering, should I put everything in equities? Or should I put it in other kinds of mutual funds or other assets?
Yeah, Lata, the whole point is not everything in equity, because, this number looks abnormally high because historically, let's say between 2009 and 2014, there was actual withdrawal from the equity funds. It's only from 2014-15 onwards we started to get some money. And in any normal investor's portfolio, equity still is not a substantial portion of his overall saving. So these number looks very high in the context of the previous month's inflow. Okay. So that's why I'm saying it is not that whole of India is overcommitted themselves into equity, so we need to panic about it.
That's true. I'm worrying about the incremental.
However, I agree with you that with this 20,000, can it come to 10,000 crores for next few months? It is entirely possible, because there is clearly been a little bit much bigger interest into equity and equity mutual funds in the last 1 year as compared with the past.
Huge money that's come into bond markets from global investors. Right. Jakes, would you think that, that worry will be there? As it is, the fisc is at a photo finish, may not end with 3.2 at all, and extra borrowing is on the card.
Let's split this into two. One is, let's talk about the equity investors first. Okay. They've been largely keeping India on the sidelines, and you've seen the figures. Yes. So it would not surprise me in any manner that this kind of a drop may, if there's a drop of any order, and we may be presaging some of this completely wrongly, because if the BJP does form the government, you may forget this in a few days, right? So having said that, let's bring back some sanity to the alarm, if you will, which is that I think the equity investors, if there is a sharp drop overseas, could use this as an opportunity to buy in. The Indian flows may reduce. So you may have a bit of a reversal of the kind of trends that you've seen recently.
And I want to make one important point here. Let's not forget that this is not an India rally. Year to date, Dow Jones is up 25% and Nifty is up 26%. So it is not that we are in vacuum rising. So till the time the global markets are what they are, I think to expect that India will correct significantly just because you have 10-20 seats lower in one state assembly, that might still be calling.
But US rally is backed by numbers, in earnings growth, Jakes, and in India the big bet is that at least the macro is, fine, and micros will pick up.
Sure. I think till recently the consensus of any in the market, we've been looking for consensus right through, and we've been talking about this. The only consensus I could find was that people said that this rally is backed on by liquidity and not by earnings. And therefore, the earnings for September have been, in a sense, better than what people expected. And I have no reasons to believe that earnings may actually continue to improve. So if there were to be a pause in the markets, it will only support the fact that as earnings move up, the P's have slightly contracted. But having said all that, I think the bottom line is clear. Maybe once the sort of winds of this have gone past 2 days later, hey presto, you may still be back to the 10,500 range. And you may be at the lower end of the range rather than at the higher end.
Ajay, so do you think, it would be a scare for the BJP, make no mistake. Do we see faster pace of reforms now, some market-friendly moves?
I think so. I think definitely we're going to see a faster pace of reforms. I think they need to get it down to the ground. You know, more than reform, now it's the last 12 months. You have to implement what you've already announced. It's not going to be a new announcement which is going to make the difference. It's what's going to happen on the ground, which is why I think that the PSU resolution thing will go much faster, NPA resolution go much faster. You will find a lot of government-sponsored schemes getting money on the ground much faster, and real growth started to kick in this point of time. That's why I said, you know, these wake-up calls can galvanize the whole system into trying to do things on the ground rather than just keeping in the policy framework. You saw what happened to the PSU stocks. They had such a big run-up on the day of the announcement, and what's happened to the stock? You see Canada Bank, it just collapsed completely after that. Now, those need to be followed through and implemented. The bonds need to be done, the sale of PSU has to be done, Air India sale has to be expedited. I think there will be a lot more action on the ground more than policy. That's why I said wake-up call is a great thing for the market. If you are sold off or you sold in the morning, stay put where you are. You might want to add in some positions because it's going to be a great run for 2019. This is going to be a great run now.
Okay, this is going to be a great run. Let's now invite one of the big India investors. Jonathan Sheasel of Ashburton is with us now. Jonathan, good morning to you in London. You know, for you, this would be good news because early in the morning there was a bit of a scare, but the ruling party is winning the Gujarat election, and of course there's the HP election as well, Himachal election, which the BJP has won. Your first thoughts on today's move?
Yeah, absolutely. So I think from a market perspective, there's undoubtedly a relief. Clearly, yeah, as you rightly say, things looked, so from a market perspective, somewhat circumspect early on in the day, but obviously as the results have come in, the market's obviously pushed higher. So yeah, relief, and also from a, I guess from a democracy perspective, probably no bad thing that it seems to be that having a viable opposition party or a slightly stronger opposition party is no bad thing for the next year and a half as well.
Jonathan, thanks again for joining us. As an India investor and a longer-term one at that, now what are your thoughts? What would you watch out from the government for the next 14 months?
So I think clearly, you know, I guess we would hope this is a shot across the bows again for the government. They need to get growth going, but obviously not growth at any cost. So, you know, I think a lot of investors are clearly worried that we might be seeing more populist measures coming through to actually you know, influence the common man as such. So we need to keep an eye on that with the way the budget is currently set up. There isn't a great deal of room to see much populist measures, but obviously there's a risk of that. But I think, you know, obviously what we've been waiting for a number of years is this, you know, long hoped for earnings recovery. I think as growth does actually start to come through, and we're actually quite optimistic that growth will be reasonably good. It's a very low base that we're operating off, both from an inflation and an economic data perspective and an earnings perspective. So, you know, we were hopeful of that recovery in earnings beginning to come through, to become more broad-based, which can justify current market valuations. And what we're not looking for is a re-rating in valuations. What we're looking for is some returns from actually earnings, more earnings focused than re-rating focused.
Oh, yeah, that's been a long time wait for this market, Jonathan. Simple question on the global setup. If the US market rally continues the manner in which it has with this tax reform, is that going to be positive for an emerging market like India, or will it be negative? We've not seen FII flows in a while. We've just been rallying on our own flows.
Absolutely. I think clearly the dollar and what happens to the dollar going forward is going to be of massive consequence. If you look at where the Fed believe interest rates are going next year and the year after, the market is not projecting a similar outlook, and as the market certainly is pricing in a less aggressive rate hike from the Fed than actually what the Fed is saying itself. So I think the outlook for the dollar is going to be very crucial to emerging markets and certainly to India as well. I mean, we would think that the dollar probably has a little bit further to go, but, you know, it's fairly long in the tooth, the rally that we've seen. So, you know, I think all in all, when you look at global valuations, if the US carries on rallying, then the EM complex as a whole still looks quite attractive from a valuation perspective, albeit India obviously is looking fairly pricey within that complex.
You know, one of your large bets, Jonathan, has been Infosys. That's beginning to make a move. You know, after scaring a lot of people over the last 2 years because of what happened with management changes and all that. Are you still keeping the faith here?
Yeah, actually, I think, interestingly enough, when you look at the valuation discount that Infi has versus the likes of TCS, we're actually, you know, I think it's quite an attractive counter here, particularly if you were to believe that maybe the market goes sideways for a bit, then, you know, you've got Infi. Certainly there is a valuation argument for Infosys here. So we're very comfortable with the position, and we might even be adding to the position going forward.
Okay. Where do you stand on financials, Jonathan? Are you impressed by the steps taken on public sector banks? Impressed enough, that is, to include it in your portfolio? Do you have any non-bank finance companies which you may want to keep or not keep?
Absolutely. So we're very bullish on financials. We have, following the recapitalization move, we have actually introduced State Bank of India into the portfolio. I'm not sure we'll hold it for many, many years, but it's probably a good 2-year story. I think there will be continued incremental positive news flow out towards the PSU sector in the banking space. So yeah, we've introduced State Bank of India as a position. We think there is a valuation story for some of the PSUs as well as the corporate banks versus the very highly rated private sector banks. We do have some exposure to non-bank financials. We've got HDFC as well as a company called Capital First as well. We're still very comfortable with both of those positions. There has been some noises that obviously the competitive landscape will intensify with this recapitalization. But I think, really focused companies like both of those are, with the strength that they're both showing in their specific fields, we're very comfortable with those positions.
Jonathan, do infrastructure stocks or capex-oriented stocks, cyclicals, utilities, do they find a place in your fund now?
Yeah, we've held some cyclical stocks or capital goods related stocks for some time. It's been, if I'm honest, a fairly painful experience. So we own 3 actual stocks related to infrastructure, if you like. We've got one road builder, and then 2 stocks focused on the ports and rail business as well, or the container business. And if I'm honest, the last year or so, we've been bullish on the sector, but the returns have not been that great from an investor perspective. But we still think that the period, as the economy recovers, that these are the right names to be in.
Okay, Jonathan, thanks a lot for your time today. Always good talking to you. Of course, you remain one of the large India investors, and so it's always good to hear an FII voice which has remained invested in India and not sold into this move that we have seen from FIIs. But let's get back to the domestic setup. Mangalam is actually at the IDFC Securities headquarters to get a sense of what's happening in the dealing rooms, and you got Anish Namania with you, Mangalam.
That's absolutely right, Anuj. It's an uncharacteristically silent dealing room as given the occasion today, but we have dressed to occasion Anish Damania with us. Thanks a lot, Anish, for joining in. In the morning there was that scare, then we had the 100 plus sort of number coming in for the BJP, and now as we speak it's 98. The lead has narrowed. Do you think that is a bit of an issue?
No, I think from BJP's point of view, the way they have to look at it is anything above 92, they retain the formation of the government, or they retain that government. So for them, Jo Jeeta Wahi Sikandar. But having said that, I think what will happen is there will be some introspection, because obviously last time they got 115, and if I were to look at the Modi wave, then one was expecting a lot more from BJP's point of view. So what they are going to probably go back to the drawing boards, assess where they have made mistakes, and I think that is good, because any such thing is good for the economy as well, because then you try and assess and see where you have gone wrong and try to take corrective steps. So I see this as a very, very good sign. And if you see these kind of signs had come you know, a couple of months before, when the government started addressing the issues of the problems of GST, where they brought down a lot of procedural problems and they addressed them. They cut down the rates from 28% to 18% on many products. They announced a very large capex program on the Bharatmala project, akin to something what they had done in Golden Quadrilateral a couple of decades ago. And now, having said that, and the recapitalization of banks. So I think they are doing the right things, and I am hopeful that they have already said that they will be cutting more taxes in future. My sense is that as inflation is rising and as growth trajectory is moving up from the 6.5% to 7.5% over the next 1 year, the nominal rate of growth will improve from about 10 to 11%, which was there for such a long period of time, to about 13-14%. And therefore, when you look at the tax collections, it's on a nominal rate of growth. And when you see that, then the tax collection buoyancy will also come through, which will mean it will give them some more room to cut taxes. Right. And I think that is what is going to spur the economy. And I'm very, very bullish on the economy as such.
So in that case, your market call as well as the stocks that you're betting on?
Yeah, so we had increased our Nifty target to 11,300 for March 2018, about a month and a half, 2 months ago. And we had introduced actually three new companies into our top buy list. One is SBI, representing the recapitalization which they have done. Second one is Greenply, given the reduction in the tax rates. And third one is Kajaria Ceramics. So we have incorporated all these into our assumptions, and our call still remains that asset-based plays are going to dominate and they are going to perform well. But in addition to that, some of the asset-light business models also, because of the cut-in duty structure, will start doing well.
All right. Thanks a lot, Anish, for that. And I'll let you go ahead and do the closing trades as well. With that, it's back to you guys from the IDFC Securities Dealing Room.
All right, Mangalam, thanks a lot for that. 320 right now. So, been a good day, but you know, the bulls may have wanted a bit more, maybe close to high point of the day. That's not happening, but still, they would take that after the kind of gap down that we had. We'll take a break and be back with market closing.